Hello, everyone, and welcome to MUFG in Conversation, our series dedicated to exploring timely topics with key industry leaders in the innovation ecosystem. My name is Priya Rajan. I'm the Managing Director responsible for the National VC coverage at the MUFG Tech Banking Group. Today, I'm super excited to welcome Laura Boyd, Head of M&A and Capital Markets at Norwest Venture Partners. Norwest Venture Partners is a venture capital firm based out of Palo Alto, California, with 15 plus billion in assets under management. The firm invests across stages, early to late stage, in United States, India, and Israel, across a variety of sectors, fintech, enterprise, healthcare, consumer products, and more. Laura oversees the firm's M&A and capital markets functions, and as a member of the portfolio services team, she provides advisory support for their portfolio companies with the goal of optimizing outcomes. Excited to welcome Laura, and Laura, thank you so much for joining us.
Yeah, thanks for having me. Great to be here.
Awesome. Laura, before we start, maybe you can share a bit about yourself and your journey till date.
Yeah, happy to. I'm originally from Palo Alto, and I went to Gunn High School. I went back east for college, came back to the Bay Area to start my career at UBS's investment bank. I was in the tech group for 2 years as an analyst, and then I moved with UBS to London, where I traded structured derivatives for 2 years. I'm going to date myself by admitting this, but during the great financial crisis, I decided I wanted to be back at home and find some stability. So I left London and came back to the Bay Area. I joined a firm called Morgan Keegan, where we did middle market M&A. And I spent my associate years kind of grinding out tough deals in a recovering economy, and found my passion for middle market M&A and working for entrepreneurs to find outcomes for them. So I did that for another 4 years before finally joining Harris Williams in San Francisco, doing both tech and consumer M&A deals. And following my career in investment banking, I wanted to try my hand at entrepreneurship, and I failed. I joined a startup that failed, and it was a really good experience. It really taught me how hard it is to start a company, all the different decisions and challenges that entrepreneurs make, but that experience really showed me kind of the path I wanted to be on, which is that I love working with people who are trying to start something from nothing. And so I had a long think about what I wanted to do next. And about 5 years ago, I joined Norwest. And as Priya said, I run M&A and capital markets.
Yeah. I did not know that you had that founder stint in you. Now I can read more into that empathy that you have towards the founders. One of the favorite quotes when we were talking about, you mentioned at Norwest that you guys use is every company is treated as a unicorn company. Can you talk a little bit more about your fund's philosophy and how do you all work with the portfolio companies?
Yeah, happy to. So we have about 250 active investments. And they're companies of all stages and sizes. We can do buyouts, we can do minority, majority. So we have companies at a lot of different stages of their growth. And so as part of portfolio services, and I don't want to speak for everyone, I can only speak for myself, but the way I approach it is that we think of ourselves as doing kind of good, boring work. So the founders that we work with, they can, in most cases, get money from pretty much anyone. So these are incredibly accomplished people doing amazing things. But why they come to us, I like to think, is that good, boring work, that philosophy of daily interaction, daily doing the hard stuff that gets companies to a place they need to be. So a lot of that is just checking in with them, making sure that we're nurturing them in a way that gets them to where they want to be. I think of it as a safe pair of hands. And so we don't just invest our time, we invest our people. Our portfolio services team is over 20 years old. It's run by a woman named Katie Belding, and she's been deep in this work for 2 decades. And she really understands the needs of growing companies. So as part of that philosophy, we approach our exits and we take that very seriously. And we have a well-articulated plan for how to get our companies outsized outcomes. That's really the goal. So historically, we do about 12 to 15 exits a year. It really depends on the market. I think the last few years, maybe it's been a little slow for all of us. Historically, we'll also do like 1 to 2 IPOs, but again, the IPO market's been really challenging. So we spend a lot of our time, and I'll go back to my experience after the great financial crisis of, when the economy is tough, how do you get the work done? How do you find outcomes for your companies? And we really approach it systematically. We generally spend about 2 years prior to an event working with our companies to make sure they know all the right buyers, they know how to raise money, how to differentiate between raising money in a private market versus going and selling yourself to a public strategic. How are those conversations different? How do you articulate your story for an audience that is different? And then as part of that work, I also cover raising debt for our companies. So we are very active in raising debt, but we're very thoughtful. And so we partner with people like Priya, who we know understand what growing companies need. And we make sure that we're being very, very thoughtful about how they take on equity and debt and any partner in their life cycle.
Wow. That I feel like that's like 5, 7 roles that you're doing at this moment. How big is your
Sometimes
team?
I feel like that too.
How big is your team?
Right now it's just me, but we're going to be growing pretty aggressively. Our portfolio services team is quite large.
Okay. Uh, that's amazing. Talking about the market, the global M&A market, we were talking about it has shown a lot of volatility in the last few years, and we're not done yet, right? Like there's still quite a bit of flux around like interest rates, geopolitics, regulatory changes. I mean, elections coming up. How does the M&A environment look to you right now, and what is your outlook for the rest of 2024 and even going into 2025?
Yeah. The second part of that question makes the question easier. 2024 is a little harder to answer, but I'll take a swing. It's been a rough 10 quarters of M&A, basically. Globally, exits have been challenged coming off the highs of 2021. I think most analysts agree that we're probably headed for what everyone has been quoted as saying is a soft landing. I think we have to watch how that happens and how rates come down. I think the most recent messaging from the Fed is that they're angling towards like a 2.5% to 3% long-term interest rates. The big question to me is like, how do we get there? Do we see an emergency rate cut on Monday? I don't think so, but ask me on Monday. I think we're going to be seeing our first rate cut in September is really the hope. It's really a question of how big that cut is and how it affects the broader economy. You mentioned that we're coming into an election cycle. It's a lot of implied volatility there. And so overall, I think the stat that I saw most recently is global deal volume for the first half of 2024 is up 17% from the first half of 2023. It's a great improvement. It's really good. But it's not where it needs to be to sort of, as we call it, break the dam of M&A that's been sort of the backlog for the last few years. The estimate that I've seen and that we're sort of looking at is that there's between 4 and 11 trillion of backlogged M&A that hasn't found an exit globally. So if we think about catching up on all the M&A that has been backlogged or the IPO pipeline, which is sort of a separate conversation, there's a lot of work to be done. And so the question is like, does a dam break? Is it a trickle first and then sort of this overpowering deal volume? I'm not sure. I think I'm hoping that we start to see an improved quote unquote trickle through the end of 2024 and then through 2025. I mean, just given the dynamics, if we can sustain a healthy macroeconomic environment, there's a strong chance we could see an unprecedented number of deals getting done through 2025. I think really what the key is, though, is to anchor in where we've come from, which is that 2023's global M&A volume as a percentage of nominal US GDP is the lowest it's been in 3 decades. So we really have a lot of wood to chop. But that's basically my prediction. But like I said, who knows?
No, we'll take the trickle, we want the sustained trickle until the dam breaks. But, I think it is trending towards the right direction, as you're saying, but is it enough? I think it's wait and watch at this moment. And talking again, double clicking on the current market dynamics, how should you work with a ton of portfolio companies? How do you, how should a private company think about a prospective buyer at this moment?
It's a good question. I think companies and boards need to be very realistic about the type of exit they're seeking, both size and buyer universe. If your targeted group of buyers includes sponsors, you're going to run a really different process than if you're strategic only. And those are very company specific decisions and conversations. But I think zooming out, I hear a lot in what I do, quote unquote, great companies are bought, not sold. And it always makes me laugh because I think to myself, I sell great companies all the time. And so the takeaway, the number one takeaway for what I do is that I really believe that M&A is a process. It's not an event. So, we joke that like we tell companies, you're not going to get like shot out of an M&A cannon, right? Like you need to engage in this process for 2 years. You need to think through who are your buyers? How do they know you? If they don't know you, they're not going to buy you. So how can we build a relationship with them? Do we know what their long-term M&A pipeline and sort of strategic outlook for how they acquire things is looking? Have we spoken to them? I spend probably 70% of my time speaking to strategic buyers. I want to hear what they want to see, deal appetite, deal size, appetite. I want to know kind of if they're willing to share. Hopefully they are. In most cases, they are. The types of companies they want to see. And so a lot of these buyers are slow moving. So thinking you can just show up and show them how great you are, it doesn't matter if you're a perfect company. If you're not on their overall pipeline, if they don't know you, they probably can't make a move, even if they really wanted to. So start with a partnership. Start with can they be a customer? Can they be an investor? Even better. I think that's the good hard work that we do on M&A is we are showing and making strategic buyers aware of our portfolio companies as often as possible.
Yeah, and relationship is important. Build it today for tomorrow. Great point.
Absolutely.
While you're advising through, across all elements of M&A process, you touched upon it earlier. How do you, what is your perspective on debt, and how do you advise them on debt? And more importantly, I think we talked about it, how do they use debt well?
Great question. And it's such a hard question because debt can be and is very important to the life cycle of a growing company, particularly one that's growing to scale. So you think about a company that's reaching 20 million of ARR, the challenge to get to, for a software company, of course, to get to 50 or 100 million is pretty major. Those are vastly different companies, and their capital structures need to be vastly different. So I think the key, and this is how we advise all of our companies. We do about, I think last year we did about 20 debt deals, and that included refinances and new debt offerings. We always tell them, your terms matter, the terms matter, the pricing matters. But what matters more than all of that is who is your lender? How well do they understand the asset class? Are they a long-term participant in that asset class? If it's a hedge fund who's dipping in because they think that it's a stable place to put money and get a 15% return, I'm not sure that's a great partner for a growing company. What we always look for is that stability, but also that understanding of the life cycle of growing businesses. Even A+ companies go through challenging periods where they need to solve problems, where maybe they have some churn or they have just challenges in a business. And so what's really critical is to make sure the lender can see that and understand it, contextualize it, get on board and get excited about how to solve that problem and move forward. So I think the way it's done well is with the right partner, and obviously terms matter, and the structure has to support kind of the long-term goals that a company has. And they shouldn't over-lever themselves, which is maybe a different conversation. But I think the key is just to be very thoughtful about who you take money from, whether it be an equity or equity investor or a lender.
Yep, absolutely. And, I think some of the metrics, talking about metrics and when is the right time, but what are the quantitative or even qualitative, more importantly, metrics that determine companies to use, what's the valuation of a target company in an M&A transaction?
Yeah. So it's an art rather than a science when it comes to valuing private companies. I think that the first anchor that we kind of guide our companies towards is look at the quantitative metrics, right? Like, how are your public comparables trading? If it's a software company, how similar are your metrics to that public software company, right? So if they're trading it, I don't know, 10 times, are you a rule of 40 like they are, right? Like if you want to trade at 10 times, you have to match metrics. You can't just say I'm broadly in the same space, so that's a comp. We don't, I think that's a common misconception, is that just because you operate in the same space that you will achieve the same valuation. I think really digging in on what the metrics are for how they're viewed by public investors will give you some nice insight into how an acquirer will view you. If you want to be acquired by a strategic buyer, they're going to view you on the same basis that they're viewed. They're going to judge you on the same basis. And so retention, all of these different metrics are super important. And then trading comps. So, what other deals have happened in your space? What were the strategic rationales for how those deals got done? We do a lot of work where we call our investment banking partners. And if we see a deal in the space that one of our companies operates in, we say, tell me about that deal. Did you have 10 LOIs? Did you have 2? Those are very different processes. What were the bidders focused on? How did they engage? How long did it take you to find those bidders? We do that work, and I think it's really instructive to the type of process that you can anticipate. On the qualitative side, where we try to dig in is, again, Priya, to your point, building that relationship, making sure that it's a longer term relationship. In some of the largest deals that we've ever seen get done, I think I'm thinking about Cisco and Splunk. It was clear, in reading the press about that deal, that Splunk built a relationship with Cisco over 20 years. And I'm not saying every deal needs to be built over 20 years, every relationship, but I think it speaks to this idea that there needs to be comfort in order to pay that outsized multiple. And that's sort of the magic X factor that a lot of private companies are looking for from a strategic buyer. So anchoring in quantitative and then kind expanding into qualitative through building a relationship is really the work.
Just to follow on to that one, as you were talking about, is there anything that has, by seasonality and or especially macro climate, has that changed? Like, you've looked at M&A transactions throughout your life. So anything that's different in a good times versus not so great times, any like nuance differences that you see, whether be it's in a qualitative or quantitative side?
Yeah, very interesting. So yes, I think when the market, so like you look at VIX, VIX especially this week has been very high. VIX is a volatility index, and it measures how widely the market is swinging or anticipated to swing. And so when VIX is really high, when people are unsure, like now this week, and basically the long-term trend of these 10 quarters of struggling M&A volumes, they want stability. They want, yes, growth matters, and you have to hit your growth milestones. But what people really want to see, what buyers really want to see, is not just growth, but that you're not burning, that there isn't a ton, that the capital structure and the cost structure has been right-sized, and that you can support your own growth in a way that is not going to be dilutive, is really how they think about it to their own if they were to acquire you. So in a market that's challenged, it's really stability. In a market that is healthier, so when VIX is below 20 or even 15, and we're seeing healthy M&A volume and healthy IPO volume, they're much more focused on growth because they want to show the market that they can drive their own growth. To your question, though, what I really like about it is that there's a nice crossover between public and private companies. Public companies have had a hard time during this period in driving their own growth. They haven't really been able, a lot of them, and I can't speak for every one of them, but a trend that we see is they haven't been able to invest in R&D to drive their own growth organically. So they are sort of looking out at the market and thinking, I need to make acquisitions in order to drive growth over the next, call it 12, 24, 36 months. And so for that, I see that as a great signal that and a great indicator that there's some sizable M&A to come.
That's a great point. And I think you touched upon this before with when you're advising companies, we talk about quite a few things can go well, quite a few things may not go as predicted. One of the things we talk about is the integration of cultures and operations through an M&A process. And more, if we take it broadly, I know you touched upon this at prior questions, how do you think an M&A done well looks like to you?
Yeah. The phrase that always rings in my ears is that old saying that is like, good fences make good neighbors. And I think in M&A, it's really applicable because the terms, you can find an acquirer that absolutely understands your product or your company, your team, shares your ethos. If the terms of your deal in writing are not clear and achievable, it can lead to a problem at post-close. So we always think we're really laser focused on details. I spend a lot of my time tracking, what's happening out in the market. What does a term sheet from this specific buyer generally look like? What expectations should we have for how we can negotiate with them? And, I think a lot of founders, to the point you made earlier about de-risking, when M&A starts, there will be sort of this trickle and then hopefully a flood. But no matter what kind of the first few M&A deals or handful of M&A deals that any acquirer does, they're going to be de-risking. They don't want to take on a lot of burn. So they may include an earnout component. There may be milestones that a company has to hit in order to achieve the full price that is sort of the headline price on the deal. And so we just need to make sure that those are achievable. What are the expectations for the company post-close? Can they control their own destiny? Will they be held to a standard that they can't meet because they're not in control? Those things all really matter. So I think having a very strong either investment banking partner who helps you close your deal, or someone like us, like Norwest, who can protect your interests as you're going through kind of the documentation process, is super important. And then taking a step back from that, it's all the qualitative stuff. Is like, do you share cultures? Do you want to work there? Do you like it? Do you think this is a place that understands what you've built and can continue to grow it? I think those things really dictate how successful a deal is.
Yeah. They need Laura as they're going through this process. Just closing thoughts. One piece of advice that, there's a lot of founders and, investors listening. One piece of advice that you'd give to the founders listening today as they're growing, scaling, double clicking on either on M&A and or kind of the broader scaling the business?
Yeah. Well, I come at things, when you're a hammer, everything looks like a nail. Like I see M&A everywhere. So when we're scaling our businesses and growing them and even initially investing in them or putting debt on them, I'm always thinking, how can we make sure that this effort gets us to where we want to be on the exit? And so I always think about it, get social, get out there. This idea of stealth, to me at least, doesn't make a ton of sense. In some cases it does, but rarely is it useful. I think founders should view M&A as a long-term process and go engage in that process with enthusiasm. Be excited to meet new teams, be excited to share the story of what you've created, and build enthusiasm for your story around you. Corporate development teams are a powerful relationship that we're proud to maintain. But beyond that, go build relationships with product teams. Go get in front of your acquirers and share why what you have is special and worth taking note of. That's the first thing, sort of from an M&A front. And then taking a step back from that, take money from people that you believe in. It's really the people and the relationships. When companies are acquired, it's the people that really have to make that deal possible. And it's true that before you're up for sale, you want to make sure that the people who are helping you grow and kind of reach that outcome share your goals, share your long-term kind of hope for the company, and actually can articulate how they're going to get you there. Everyone will tell you, oh, we're going to take you to IPO. How do they plan to do that? Make sure that they can walk you through that on the first day. What are their plans for really finding an outcome that everyone can be excited about, and really embrace M&A with you and build momentum?
Yeah, great advice. Super insightful. I really, really appreciate you taking time, and thank you so much for joining us.
Yeah, my pleasure. Thanks a lot.
Awesome. Thank you all for joining us, and looking forward to seeing you all soon. Thank you.